Hi, Pat fam. This is part 3 of a series, Price Action Trading for Beginners. How to spot a failed two-legged pullback, also known as a failed second entry. This is by far the best and most reliable scalping strategy. Like everything else in life, nothing is 100%. But with the correct setup and context, this strategy has greater than a 95% rate of success, almost a guarantee. Today, we'll go over how the failed two-legged pullback is set up. In order to be able to spot a failed two-legged pullback, you first need to know how to count legs and also spot a regular two-legged pullback. If you do not know how to do either of these, please stop watching this video right now and watch part 1 for counting legs and part 2 for spotting two-legged pullbacks. They should both be part of the playlist that this video is currently in. Once you've gotten proficient at spotting the two-legged pullback, you are ready to spot the failed two-legged pullback, which I often refer to as a trap, since it is a type of bull or bear trap. I'll explain more of that in a moment. Also, mind you, though you know how the trap is set up, it doesn't mean you are trading it with the correct context. When I say context, I mean confluence with technical analysis, such as being able to recognize that the market is trending or in a range, trend lines, channels, support resistance levels, and moving averages. Also meaning market structures such as head and shoulder patterns, cup and handles, bull flags, bear flags, double tops, and bottoms. Recognizing the context, I would say, would enter into the realm of more intermediate level of price action trading. But with both the setup and correct context, this is, in my opinion, the most powerful and reliable strategy. However, today, we will simply go over the setup. Just for a brief refresher, I first want to quickly go over a two-legged pullback. I find if you have the two-legged pullback fresh in your mind, then a failed two-legged pullback will make more sense. However, when going over these, I will not spend much time explaining how the leg counts are being counted. If you are in this far in this video and still don't know how to count legs, then you are hopeless. Please stop this video and watch part 1 to learn how to count legs. The basic concept of a failed two-legged pullback is this. Remember, as recognized by Al Brooks and many before him, that the market likes to move in twos. On the downside, we see moves like this. On the upside, we see moves like this. And this is part of our DNA. It has always been like this since the beginning of trading. After a two-legged move, the market is expected to move the other direction, perhaps creating another two-legged move in the reverse direction. So after a down two-legged move, the market is expecting a two-legged move such as this. Or perhaps after a two-legged move to the upside, the market expects a two-legged move in the opposite direction. And this is the basic concept of the two-legged pullback. Typically, with the right context, it is a good place to enter into a trade after a two-legged move has happened. We'll review one here. Here, we see first recognize the trend. Here we see a trend going to the downside with strong bear bars, as seen here. Not only that, we have broken the 20 EMA. If you can recognize this, this is also a type of topping pattern. We're in a small range and it has broken down after a type of exhaustive move on the left side. So we have all of these bearish signs showing that we have possibly a reversal in trend and also the beginning of a bear trend. Clear up these boxes to make it more clear. Now, after we recognize the trend, we try to spot a two-legged pullback. You can see a two-legged pullback right here. We have one leg up. A slight pullback, or we call it a first entry. And then the second leg of the pullback right here. This is a two-legged pullback. I will put the numbers here just for reference. So we have the first leg up there, and now we have the second leg up here. And we see here we call it the first entry. The first entry happens after one pullback, but traders are trying to enter into the second entry, which is right here. This is the second entry. The second entry, once the trend has reversed or a down leg has been created after the second pullback. See here, we also see that we are in a critical spot with the 20 EMA, where the trigger will happen under the 20 EMA. This is a critical technical spot. So this is a good two-legged pullback. And you see here that traders had entered in one tick below the signal bar. And they entered in, one second, let me clear up some boxes. We see that they entered in this bar. This is the trigger bar because of the signal bar's low, one tick below the signal bar's low. So now we see that this would have produced a good trade for many points. You see here that it has made more than a scalper's profit. Not only that, if you had kept the runner, we could have captured more of this downtrend. So there we have a two-legged pullback, a successful two-legged pullback, in fact. After this successful two-legged pullback, we can confirm we are in a strong downtrend. Strong trends is typically where we find the failed two-legged pullback. And this is where they are typically most reliable. Now we will spot a failed two-legged pullback. We can see here that the market tried to make a two-legged pullback. Here is the first leg of the pullback. Then the first entry and the second leg of the pullback. Now what the market is expecting is to see this, something along these lines. The market is expecting to see a move like this. After a two-legged pullback, they're expecting a reverse in trend. However, this is in a strong downtrend. So the market does actually reverse in trend, but it does so for less than a scalper's profit. The market tries to reverse, but it only does so for 2 ticks. A scalper's profit requires 5 ticks, 1 tick for the stop order and 4 ticks for the point. But here we see that when the market, after the two-legged pullback, tries to reverse direction for the second entry, we see here as the traders try to enter into the second entry, we see that the second entry fails to make a scalper's profit, as we can see in this purple box. Now, instead of going the opposite direction, continuing the opposite direction to make at least the scalper's profit, the market reverses again. And this time, breaking the signal bar's low by at least 1 tick. And we can see, as we can see here, it reverses direction and goes down again, resuming the original trend. And this is the failed two-legged pullback. We see a couple of things here. First, we see why it's called a failed second entry. It's called a failed second entry because the entry after the two-legged pullback is called a second entry. We see here first entry, here second entry. And this second entry failed to make the scalper's profit. So this is now a failed second entry. And this is why this is called a failed second entry. Secondly, this is why I like to call this a trap. I will zoom in to help us better see the nuances of what is happening in a failed two-legged pullback and why I consider this a trap. This is a closer look of the same setup. We have here a two-legged pullback, one leg, first leg of the pullback, first entry, second leg on the pullback, and then our second entry. Second entry going this way. I'll get rid of this because it's slightly in the way, but notice how this candle broke the prior candle's high, as we can see here. Prior candle's high being right there. You can see that this candle broke the prior candle's high, and it only made a move of 2 ticks. You can see the move that it made here is of only this box. only 2 ticks, which is less than the scalper's profit. Remember here, traders were expecting the market to move in this fashion. They're expecting it to move in this way. After a two-legged pullback, they expect the trend to reverse. It does, so traders have entered in now, but it suddenly reverses again and goes the other way. But all those traders who had thought that the trend was going to reverse and go upwards are now shown and visualized in this purple box. This purple box, even though it's only 2 ticks large, represents all of the trapped traders who thought the trend was going to reverse. And so now all the traders here who went long have their stop orders 1 tick below the signal bar's low, which is right here. All these trapped traders in this purple box have realized they have been fooled, and they quickly want to leave their position. And so their stop order is 1 tick under the signal bar's low. And this is why this is called a trap, because we have essentially trapped traders in this purple box. And this is why this setup is not only reliable, but also so powerful when used correctly. Because not only are the bulls in this purple box are now trying to exit their long positions at this red line by selling, shorts also entering into their positions, which means they are also selling in the exact same price. So in this single price point, there is both the force of bulls selling and bear selling, which causes a tremendous imbalance in the market. And this is why this setup is so reliable. If done correctly, the force of both the bulls and bears will drive the market typically in an impulsive and sudden manner. Here, we see not only a scalper's profit, but about 2 points could have been made, probably within a couple seconds or even within a couple minutes. Not only that, it continues to move downwards, further indicating that this was a successful trap. To enter into this trap, it will be like entering the two-legged pullback or any other order. We'll place our stop order 1 tick below the signal bar's low. We will put a stop loss 2 ticks above the signal bar high, and our target will be 1 tick plus a runner. Which will gain you how far the runner goes and however you want to trade the runner. And that is the failed two-legged pullback, also known as the failed second entry, but my personal way to call it, I love to call it the trap. And this is by far the most powerful and reliable setup when it comes to scalping. That's it for this. Hope that's been beneficial to you.